Hello, my name is Michael Glass from emini-trading-coach.com, where we focus on trading high probability trading setups. And before we begin our video, we need to start off with disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose your money. Any investment decision you make is solely your own responsibility. Trade at your own risk. So let's go ahead and look at our weekend wrap-up for February 19, 2011 as we head into President's Day. And when we look at the key events of the last week, it's going to be pretty dry. We were fortunate enough to have the market end up for the week, basically up a percent or two across the board, or our three major indices. Those modest gains. We had a couple dips. 8 out of 10 major sectors rose, led by oil. We didn't really have any geopolitical concerns. There are some people watching whether or not some of the oil-producing countries will have some of the protests that we saw in Egypt and what that will do to the price of oil if it happens. No real corporate news. FedEx missed. ConocoPhillips had some earnings. Dell beat their earnings. But there wasn't anything that moved the market. And similarly, there really wasn't anything on the economic front. We did have Fed leading indicators come out and obviously initial claims. And Friday, there was no news. There were a couple days there was no news. But in the end, there was nothing that said because this happened, the market did this for the entire length of a day. So there really wasn't anything that moved the market this week. The FOMC minutes didn't really move the market. So when we look into what's going on this week, we do have some earnings, but again, we're very light. Home Depot, Walmart, Hewlett-Packard, GM. Nothing that I really see will move the market unless Home Depot, Walmart says something horrible about the consumer. We obviously were closed on Monday for President's Day, but consumer confidence on Tuesday, maybe. GDP on Friday, maybe. Michigan Sentiment Friday, maybe. But we're in a period where earnings are over. We're light on catalysts, and that's what did you see? We saw a very light week, and we may be setting up for the same thing next week. When we look at our key technical analysis points, we can see that we're still obviously in an uptrend. By the dip. Now we want to close above 1341. We still got resistance as we drew out last week at 1355. Support around 1312 and the 10 and the 20 exponential moving average. And right now, I would say there are no points of interest, maybe right where we are, because we did close here for the week. But there's nothing that, we've got to do in order to move higher or lower. So let's pull up the charts and take a look. So here we are. We've got our chart up. We're looking at the S&P 500 on a daily chart. Beautiful uptrend that we can see from November. And you can kind of see that, I don't want to say our candles are getting smaller, but we are obviously still in the uptrend. You can see what we're saying with the green line being a 10 exponential moving average, acting as support. Came down here also to 20. And this is from before 1275 that we talked about. And then this is the 1312 that we just talked about as far as support. Above us is 1355, and we drew these in, if you recall from last week, off of our monthly chart where we came over here and kind of matched up these wicks and said that's our target for our resistance. And one thing to also notice is that, remember, and this is also sort of what the market profile, which we got a great video on the blog to check out. But, as fast as we go down, meaning there was no support as we came down, it should be the same thing coming back up because these were lightly traded areas. There wasn't a lot of price action. We just went through them so fast. So yes, as we know, you make more money going down because it goes down faster, and it is taking us longer to get up. But the basic principle is still the same, that these were lightly traded areas. We went through these very quickly, and so we're moving up. Also, we haven't found the sellers to push us back. Should be interesting to see what happens here at the 1355 and also this little dip here. But, again, here's our October 2007 beginning of the decline. So, it should be interesting. Now, obviously, we've been talking about this for a couple weeks. We are obviously, going back to the daily, we're obviously overbought all across the board, overbought. RSI overbought, MACD overbought, Stochastics overbought. On the weekly, we are overbought across the board. On the monthly chart, we are getting to overbought on stochastics. MACD has room to go. I'm sorry, this is RSI and this is stochastics down here. So what we're seeing is that all three of our time frames, our longer time frames, are showing pretty much the same thing, which is overbought. So now, as we said last week, and I guess I'll reiterate, it says sure, we can stay overbought for a while. I mean, you can see we've been here for a while, but now that we're getting all three time frames in agreement, I would be cautious here. Remember, cautiously bullish on some type of pullback that might come down the ranks. As we move on to the education portion of our video, we've been talking about entry and market timing in the book Trade Your Way to Financial Freedom by Dr. Van Sart. And we spent a lot of time talking about setups and how much energy you should put into that. But now we're going to talk about how to time the market. And he goes on to say that there's basically two parts to time the market. The first approach is reliability, which means you find a stock, you learn the heartbeat of it, and you just kind of rely on the uptrend, you rely on the downtrend. So the key to making money is not necessarily technique or finding the perfect entry as much as finding a good stock. A perfect example would be Apple or Netflix over the past year. I mean, the moves they've made. So you could have bought any time over the last year and made money. Whereas the second approach is not about relying on a trend to make you money as much as it is to focus on high probability, getting multiple trades and letting that probability of those trades at the end of the day make you a fortune in the market. Both of these are important ways to time the market, but the second one is different. The second one, is kind of more like stock in the market. You're waiting, you're waiting, you're waiting, and you're waiting, and then when you finally get that criteria, you finally get that setup, you enter the trade. And you're looking at multiple stocks. That's one of the things I talk about Forex and futures. Futures is great, but Forex, somewhere on one of those currency pairs is a trade. Futures you may have to sit for a little bit while you're waiting for your setup. One of the reasons I'm beginning to like Forex better than futures. So we're going to talk more about this stalking the market in our next video. So you guys know we're on Twitter, Facebook, and YouTube, emini-coach on Twitter, emini-trading-coach on YouTube and Twitter. Facebook. And we've got a great Facebook page about high probability trading setups. If you do a search for high probability trading setups on Facebook, you'll find us. Good way to keep up to date with what's going on. We got this great free 5-part video course just on high probability trading setups so that you can get an introduction to what we mean in our actual video series. And you'll notice that we're not talking about thousands of dollars. We're talking about giving you the foundation that you need to become a good trader. But the way to become a consistent, profitably trader is by developing a trader's mindset. And that's what we here at emini-trading-coach are all about. It's helping you attain that trader's mindset that allows you to take your trades, allow you to develop a high probability trading plan personalized to who you are as a trader, so that you can pull the trigger and place the trades day after day after day. We've got a great relationship with Global Futures. They've got interest rate margins as low as $300. They've got competitive rates. Give us 20 free trades if you sign up through us. And as you guys know, we've been starting our Forex blog, Your Forex Riches. Check it out. We're trying to give the same great technical analysis spin to Forex as we do to futures. Thanks, guys, and I'll see you next time.